Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having an amazing day. We're taking a quick look here at Bitcoin. I try to make it brief, kind of just touch on some important factors going into the weekend, kind of what to be aware of, and roughly where we're at right now, because we had a kind of a rejection off that Fibonacci level there at about 29,600, a bounce off 29,000 roughly, very, very close to it. And then of course, right back up to retest that level. So what does that mean for us? Is it going to break? Is this a, double bottom? Are we looking at a potential cup and handle? We'll try to see what's going on. So again, thank you so much for joining me here. If you're new to the channel, welcome aboard. And obviously if you're returning, thanks again for all your support, your continued support. CryptoCash.tag is a site if you want to become a better member, or trader rather, by becoming a member. And obviously reference our BingX exclusive giveaway before July 31st. $150 rewards there up for grabs, so be sure to check that out before that's unavailable. So what we want to talk about is a few things. Let's just jump right into the high block capital data stuff first. We're going to look at just say the 4-hour time frame, so we can kind of see a little bit more appropriate measures here. In other words, we got a lot of liquidation levels here, but the bottom line here is that currently a lot of liquidation levels are roughly at the, and these are again for shorts, so these are most likely the stop loss locations. They're right at about 29,960. So round number 30,000, big surprise. A lot of shorts are leveraged right there, just in case. And then same thing here as well for longs, 28,500. That's basically a place in which I have some buy orders set for my spot exchange, right? Furthermore as well, 28,100. So between 28.1 and 28.5 would be our key level supports, if you will, based on just kind of roughly where everyone is putting their stop loss. And then furthermore, of course, we kind of got the same thing at 30,000 for shorts. Take a look at the whale data. We can kind of see whales are, of course, much more active in the most recent past here. So big surprise, the price is kind of sticking around, right? Because anytime we have like these hard shifts in momentum and the price hits like a certain location, it bounces pretty hard and the whales become very active. So just keep in mind, with whale activity, that kind of tells us we have some support in this range. I don't think we're going to lose this range just yet, but I do feel the more likely we are to break down is happening as a result of retesting those levels. Okay, so we're more likely to break down than up at this point because we've retested that 29.1, 29.2 range more frequently than the 29.6 range. Okay, again, that can change over the weekend, totally fine, but for right now we can see in the last roughly 8 hours, just under 8 hours, 4 hours rather, you can see a lot more longs are being opened than closed. And then when it comes to the shorts, we can see a lot more shorts are being closed than opened. Okay, so there's more long bias here at this current point. And again, same thing occurring in the last 4 hours too. So all in all, that's kind of the general consensus, but makes sense, of course, because the fact that the prices had increased and probably squeezed out some of the shorts there that were leveraged right about 29.5. So we can kind of see that here reflected on the charts. These are the longs. We can see our longs are roughly at about 29,200. A big surprise there. We got some late longs kind of in the red. Try not to be a late long, but of course it does seem like it's likely that we might see a retest at 30,000. At least that's what they were thinking, right? Going into this retest at 29.6. So until we close above 29,600, I don't personally think that we're going to see that just yet. That is a pretty strong rejection zone. And again, we'll talk about that on the charts here as to why, but 29.6 was essentially that key level support for the last few days before we lost that support on Monday. Okay, so just keep that in mind. That was a previous support turned resistance now. When it comes to shorts, we got some really late shorts there at 29,100. They're all in the red, so you can see that shorts are struggling more so than longs right now. Okay, big surprise, kind of par for the course, you could say. Okay, so let's take a quick look at the daily and kind of work our way down and kind of see what is going on here. Let's turn on some moving averages, kind of see, and same narrative here. Basically, we're still ascending positively. We're still holding above the 50-day SIP moving average. That's a good sign. If we do lose that level, keep in mind we got this ascending trend here where the price action has continued to retest these higher lows, and we've got the 200-day SMA kind of averaging itself out. So that's a very positive sign in the sense if we were to lose this current support. We have the 200-day SMA averaging itself at about 26.5. I do not foresee that being a reality. I do think that the price, if it were to continue lower, the moving average will continue higher, and we'll continue to average ourselves out to likely bounce off that, once again, 28.5 range. That's just my personal opinion. But again, I don't think we're going to see much lower than 28,500. I hope I'm wrong in a strange way, just because of the fact that I would love to add to my position at lower price points. I do like averaging down. But again, there's a lot of different stories out there, a lot of different narratives. So just keep in mind, that's my thoughts and my thoughts alone. You can subscribe to your own thinking, right? Because again, things are looking pretty good for cryptocurrency in the overall sense of things, right? So for the most part, for it to come much lower wouldn't make a ton of sense. That said, on the MACD here on the daily, we're still diverging, and it would make sense for us to converge positively in the relative near future. You can only diverge for so long, but once again, we've hit a 9 on TD sequential plus a few extra days, so in truth, we could see a lot lower. But if we look at the RSI, I mean, this kind of gives us an indication that further downside is possible, but it's less probable because we can see the money flow index is fairly low, and it is trying to bounce here. We got some more money coming in the market here today. We can see stochastic is also further extended. And if you look at its history too, for the most part, stochastic RSI, concurrent with the price action, it's super rare for it to double bottom or triple bottom, if you will. And we've already hit 1, 2, almost 3 bottoms here for stochastic RSI without coming up over 30. Okay, it's statistically less common. Okay, does it mean it's going to shoot to the moon tomorrow? Definitely not. It just really tells us that the bottom is getting close. Okay, because again, a lot of buying pressure, a lot of momentum to the downside, and that momentum to the downside is not super significant. So we could see a sell-off, but once again, I don't think it's super common. I do think, once again, 28.5 would be the next lowest low that we're going to see. And the reason why I feel that way too is just because our most recent high is averaging itself right in that range of 28,000, 28,500. We've also got that fair value gap, as I mentioned here previously. You can see this on the daily. Go ahead and pull this up so you can just kind of get perspective on what that looks like. We got the fair value gap kind of averaging itself out right there. So again, the low side of the fair value gap is 28,400. And again, that's derived from the most recent high, establishing itself as the most recent low. Okay, that's kind of how those gaps occur, and that's why they happen. Because again, you can kind of see that trend, that history, where the previous high turns into the new low. Okay, previous high, new low. All right, so it's again pretty likely we're going to see something along those lines. All right, so let's go and wrap this up on the 4-hour and the hourly. Call it a day here. We're below all two important moving averages. We got the 20, which is a trend setter, which is good. So we can maintain above the 20-day SMA. Moving forward, we'll be fine. Obviously, that's how it's supposed to work because it'll start moving upwards with the price action. We do have increased volume last 4 hours. That's a positive sign. So I do feel like we have a little bit more likelihood of the further upside, but keep in mind, price keeps getting rejected at the 50-day SMA, and that's a pretty consistent indicator, right? That being said, closing above the 50-day SMA I think would be a good starting point. So if we can close sometime today and or throughout the weekend above that level, honestly, all we really need to go is sideways for the next 3 days. We'll be naturally above that level, and that should be able to provide us with some support. Okay. Take a look at the RSI. We can kind of see here on the 4-hour that we're kind of treading water right at the 50. No break officially, so it's kind of is where it is. Just all good the way it works. Okay, so we don't need to worry about that too much. It's not like it's a key level that we've broken through, but it does indicate that we're having difficulty breaking that plane. And if we don't close above, just say 29.4 today, that 0.618 Fibonacci retracement level, then we're going to be in a position where the price may continue lower. In fact, let's go ahead and pull this out a little bit further just so we can kind of see this descending type of trend as well. You can kind of see, of course, we're making lower highs so far. So until we break that lower high pattern with higher lows and higher highs, we're going to be in this situation. And again, that's why you want to wait for confirmation. We don't have higher highs. We have a double bottom, for lack of better terms. Now, again, double bottoms typically will continue the direction they started. Unfortunately, it started here, so we could very well see it come down, right? That said, this is not an official pattern, nor is it legitimately the direction we're going, but it is something to kind of think about. The bottom line here is the reason why double bottoms occur is because they retest that key level support multiple times and inevitably break. Right now, we're seeing this level getting tested, the 29,100 range, and the more likely we are to break down again is because of the fact that we are more apt to retesting that level. Okay, so if we can keep retesting the 29,600 range, then I'd be a little happier, but we wicked up here just today and got rejected pretty instantly, so not the greatest. But again, smaller time frames might identify that. So if we look at everything here on the 4-hour, I would say it's fairly neutral. There's not like a lot of confirming patterns. They're mostly kind of contradictory. Taking a look at the 1-hour, this is where things kind of get more confirmational for me as far as transitionary time frames are concerned. We can see the hourly came down to a 9 yesterday and kind of bottomed out at the 29,100 range. Okay, we got a pretty consistent level here, a line in the sand, where that 29.1 is a really strong point of contention, right? So again, as you can see, double bottom, but once again, rejecting at the same level here. So again, not fantastic in the overall sense of things. It would make sense for the price to continue to progress down based on that sentiment. We did also hit a 7 here on TD sequential, or I guess you could say we're hitting an 8 because the 4th previous is lower. So in truth, we're going to be hitting that overextended state based on the simple fact that we've had more bullish continuation of the last 9 hours, or 8 to 9 hours, okay? What does that mean for us here? Well, it really just tells us that we're in a position right now that the price action should pull back. And in all likelihood, it'll bounce off this level here. If we get a good bounce, that's what we're looking for, is a bounce off 29,250. Because again, it's using that most recent low, the most recent high as the new low, bouncing off that level. That's how fair value gaps are established. That's how they are filled. If we look at the hourly, we can kind of see here that there is still somewhat of a fair value gap in the larger time frame here that hasn't been fulfilled. Again, that's where the 29,800 range is potential likelihood of getting filled there, just based on that previous low, right? Working as a current high. Yeah. Again, a lot of different ways to look at things, but these little things are helpful to understand that they inevitably are filled, whether or not it's today or months from today. So just keep in mind, there's an inevitability there. Not like that helps us right now, of course, but generally speaking, we are looking more so like, I would say downside makes more sense than upside, because we weren't able to establish a higher high here. So unless this next low can be higher than the previous low, then we are going to be in good shape. Okay, in other words, to make it simple, we need to bounce off 29,300 as a close approximate in order for this to continue upwards, right? If we do not establish higher lows, we will not establish continuation or a trend moving upwards. While it's all nice and good that we had this little higher high here, right? Higher highs is one thing, but if you can't follow that with higher lows, it makes no difference. Yeah. So I'm looking for a higher low that is somewhere in the range of 29,300, and then of course potential consideration for a long position. We already have a long position open, honestly, and so far I still feel comfortable and confident that it's going to hit our target. We came very close at 29.6 here, and we waked up to 29.550. So again, do not worry too much about that, but the bottom line here is that to confirm that will potentially be hit is to give us a confirmation of higher lows. We need to see that. We also want to take a quick peek at the Ichimoku cloud. We can kind of see we're wavering above and below that. Okay? This is never a great sign, but the good news is conversion lines above the baseline. Lagging span is technically free and clear of price action, and we're averaging ourselves out close to above the cloud. So again, closure today above 29.3 I think is a very solid step in the right direction. That's what I'm looking for. All right, so hopefully that works well for you. And again, if you want to kind of join the crew here, get on over here to our Crypto Cash Trading or at Cash Trading on our Twitter. We also have a Telegram that's very similar as well, to ensure that if you prefer that platform over this, you can utilize that as well. So just help us grow this. Like, follow, retweet, the whole 9 yards. Greatly appreciate that. And obviously the same thing with our YouTube as well. Do appreciate that. Like, subscribe, follow, comment below, whatever you feel. And if you've been watching the channel for a while, feel free to comment and let me know. I love to hear that. It's always great to interact with my members. So again, that's why Twitter is a good medium for that, because we can communicate openly if you're not currently a community member. All right, well, hope you have a good rest of your day. Thanks again so much for your time. Be safe out there. I would recommend kind of just stepping on the sidelines, this weekend, whatever you want. Like, we had a trade that went kind of south. I had to manually cancel it yesterday. And on my BingX account, honestly, I had to take a small loss. So in truth, when those things happen, just so you know, it happens to everybody. It's not like something that you can avoid. You're never going to be a 100% trader. And just know that when those things occur, the thing that works best for me is to take a 24-hour time away from trading. Do what I do best, things that I enjoy, taking walks, play the guitar, swim with my dog, all fun little things that I like to calibrate. And it's important for you to do that too. So make sure you calibrate if you took an unsuccessful trade recently. Whatever the case, it happens, it's normal. The important thing is to learn from it and to get back on the horse and to ensure you don't let that stop you. All right? Hope you have a good one and a wonderful weekend if we don't talk to you later. Thanks again for your time. I'll see you soon.